Hey, I just put a video together that I'm getting edited right now for social media and for my complete database, but I want to get this out to you first because I think it's so relevant to what we're going through right now, and I think it can help deals get completed. So I think it's really important. What I'm talking about, interest rates are up. We all know that. Buyers are kind of getting antsy and nervous, and we know that as well. And so one of the things we can do is go into a variable rate loan, of course, an interest-only loan. That's starting to happen. It's gone from 3% of the market to 10% of the market. But the other thing we can do is we can look at a permanent 30-year fixed buy down. Now, you've probably all heard of the 2-1 buy down, where you get really low rates year 1, a little bit higher year 2, and then year 3 it goes up to like basically what market is today for the rest of the loan. Pretty good. But for the same cost, you can just get a lower rate for 30 years on a mortgage. And so that's what we're going to talk about today, how we can keep some buyers in, because it's a lot like cars. They're worried about payments. And so if we can get the payment down, we can get people maybe more interested in the loan, especially if the buyer doesn't have to pay for the lower rate. So what we're going to look at is a seller buy down strategy. Where the seller, instead of reducing his price, credits money to the buyer so he can get a lower interest rate. So that's what we're going to look at right now. I'm going to show you a scenario, and then you guys, I'd love to hear your feedback on this. Okay, so here's the scenario. We've got a $900,000 purchase price. The buyer wants to put 10% down. He's going to have an $810,000 loan. Today's market, middle of 2022, we're looking at no points, 5.5%. A little lower, a little higher, depending on what's going on with everything else in his credit worthiness. And when you put tax and insurance in there, it's about $5,600 a month. Okay, so we got a $5,600 payment, and let's just say this: the buyer can't qualify for that, or the buyer just is not going to break, a certain number, 5,300 for instance, or 5,350 for his, and that's the number that he's at. And I know a lot of millennial buyers are like that now. They get a number and they stick to it really, really hard, and that's not a bad thing. Okay, so let's think about this. Here's what we can do. The buyer needs a lower payment, and what's the typical thing we do? We reduce the payment, the sales price, until he can get to that payment. Well, let's look at the seller buy down. In this scenario, the seller, instead of reducing his price, reduces in a different way. He gives a credit of money. In this scenario, it's about 2%, which is about $17,000. So let's say $20,000. He credits the buyer, and the buyer uses that to get a lower rate. Well, in this scenario, he goes from 5.5% to 4.875%. He goes and he saves over $300 a month. Okay, so we either get him to the point where he can qualify, or to the number that he's willing to buy a property at, and all it costs the seller, I shouldn't say all, but it costs the seller $20,000. But look at column number 3. Column number 3 is a traditional scenario where we just either walk away from that buyer if you're the seller, or you lower your price to get to the point where the buyer is willing to buy it. Well, in that scenario, if we're at 5.5% and 0 points, to get to that $5,300 payment, roughly, you'd have to reduce the property value, or the property sales price, by $55,000, and that would give a lower loan amount, and that would get the payment where the buyer would be willing to come in for this scenario. Well, so that just cost the seller $30,000 by just doing it the traditional way versus the seller credit. In addition, it kind of messes up the whole neighborhood, because you just went down $50,000 or 5% on your sales price, so for the sales comp. So what happens here? The seller makes more money. He sells his house, win-win for him. The buyer gets his house, and he gets the payment he wants, win-win for him. And then you got all the neighborhood that you can tell everybody that you sold a property at a great price as well. So a great strategy for you. Think about this one when you get stuck in a negotiation where it's getting to the point where you're not going anywhere anymore with this. This might break the ice on that scenario. If you have any questions about this scenario, if you have any questions about what is going on, or if you'd like to customize it to your own clients, feel free to reach out to me. I'd love to be your resource for that. Listen, my company, our goal is to borrow smart mortgage services. We want our buyers to borrow smart, but look, let's let our sellers borrow smart, or help the buyers borrow smart so they can get a better deal as well. Been in the business for over 20 years. This is a third scenario where we've seen this. I've been involved where the market turns like this, and it's not fun. So we got to get creative and we got to get aggressive at this point in time, and we got to lead. We got to lead our clients and show them different ways because they don't know most of the time. I hope this helps. Jeff Younger again. Give me a call if you have any questions. You want any help on a scenario. You want to just talk about it. Have a great day.